This is the Trade Finance Distribution Initiative podcast, where we focus on the growing business community of trade finance stakeholders. I'm Andy Duckworth, and we're introducing those who are speaking at our Trade Finance Investor Day. Today's guest is Sean Edwards. Sean is the chairman of ITFA, the International Trade Forfeiting Association. And quickly, ITFA is the worldwide trade association for companies, financial institutions and intermediaries engaged in global trade, forfeiting, supply chain and receivables financing. Hi Sean, great to have you here.
Hi, thanks Andy, thanks for having me.
So Sean, can you give us a quick introduction to you first, please, and how you got to where you are today?
Right, so actually my day job is as a lawyer. I'm head of legal at Superintendent Mitsui Banking Corporation in London, covering the EMEA region. ITFA is my sort of my work of passion, if you like. I've been chairman now for over 5 years. ITFA itself's been around for nearly 25 years. We are a large association, as you say, around 300 members in over 40 countries. We started in a very specific market, the forfeiting market, and we've broadened out since then into covering insurance, the broader trade finance market, supply chain finance, and of course we have a very large fintech cohort, including people like trade tech.
Now, I'd like to touch on a few recent significant developments in our industry, one of which is the Electronic Trade Documents Act. Now, this is a big deal. What is its relevance for institutional investors?
Well, the first thing to say is this is part of a global movement. So the Electronic Trade Documents Act, the ETDA, is the UK version of a piece of what you might call global legislation called MLETR, the Model Law on Electronic Transferable Records, which is a piece of model legislation that was passed by UNCITRAL. They can't pass laws for each country, so each country has to adopt it, and it's been adopted in a number of countries. For various technical reasons I won't go into, we didn't adopt the Act in its entirety. Some countries like Singapore have done that, and countries in the Middle East. Instead, we dealt with a very specific issue that we have under English law, which is actually common to a number of common law countries, so English law tradition countries, and that is that you can't possess an electronic, a digital document. And the types of trade documents that we're talking about, negotiable instruments, have to be possessed, and that's what the law has. That's the status that the law has given to them. It's very powerful, because what it means is in a piece of paper you don't just have evidence of the goods or the debt, but you actually get title to those goods or debt. So goods through a bill of lading, title to a debt through something like a bill of exchange or a negotiable a bill of exchange or a promissory note, and also they can be transmitted. That's the negotiability part, simply by handing over the piece of paper. Now that was great in Victorian times. It's not great now. It wasn't great during COVID, because it meant that we were stuck waiting for couriers, for people's offices to open and so on. And of course it has a lot of transaction and processing costs that we want to eliminate. Why is this good for investors? Well, you've got a fantastic trade debt instrument. I'll leave bills of lading aside for one moment. If we talk about bills of exchange and promissory notes, you've got a fantastic debt instrument. It's an unconditional, absolute obligation to pay in a very simple form. And that tends to be what investors like. They want to make sure that legally what they're buying is simply a promise to repay the amount that they've invested on a particular day. And with things like bonds and loans, that can be more complex. The whole idea of a negotiable instrument is that it's very straightforward. It's provided you get the form of it right, and of course up to now the form of that has needed to be paper form, but no longer, as from 20th of September. Provided you get the form right, you've got that absolute undefeasible right to be paid, and that's a very powerful instrument, I think, because it's simple also, and because it's very easily digitizable. It's a great tool for finance. It's a great it's a great sort of medium for translating into a crypto asset, to use a bigger term. So what you can do with a crypto asset, of course, you can put it on a blockchain or use another technology. You can attach a whole lot of other useful things to it, like, for example, the credit status of the counterparty, the KYC, the sanctions status, and you can put it on a platform, which doesn't have to be very complicated, and you can trade it. So you've got the immediate makings of a market there. In fact, that's what the fourth rating market used to be before everybody got sort of fed up with paper.
Great. Now, something else I wanted to ask you about. ITFA has the ITFIE Expert Working
Yes.
Group. Now, what are some of the key themes you're discussing at the moment, and in particular, ratings for trade finance
Yep.
funds?
Yeah, so ITFA, which stands for ITFA Trade Finance Investment Ecosystem, is about attracting non-bank investors into trade assets. And part of the problem, there's a number of issues with that. One of the issues, which I've touched on in when I was talking about the simplicity and the attractiveness of negotiable instruments, is that for a lot of non-trade savvy investors, trade instruments and trade debt looks very complicated. It can take a number of different forms. It's not something they're familiar with. It's not like a loan or a bond. But as I said, with a negotiable instrument, you're getting something that's very close to a bond. So they find it hard to understand what the actual risks are in the underlying instrument. And again, that's why we're promoting digital negotiable instruments. Other things we're doing, you've mentioned ratings. So, and that's another thing, of course, that you can attach to a digital negotiable instrument. You can attach a rating. People like Fitch and Moody's have been looking at this. The issue has been to move away from a sort of corporate rating model to more of an asset rating model. That's one of the important things that we're working on within the ITFA group. We're also working on, to the extent it's possible, and I know this is a controversial area, trying to find some standardized documents, trying to create actually standardized documents that investors can use to invest in underlying assets. So if you take investing, for example, in a digital bill of exchange, hopefully the investor will find that it's quite simple to understand what that is. He is satisfied and is happy with the way that document is, that digital asset is created and kept on a register. And then, of course, it has to have a means of investing into that. So you've got the standardized asset, you've got the standardized contract for investing into that. Now, some people won't want that. They'll want to have their own way of doing things, and that's fine. But trying to attract a larger mass of investors, I think it is useful to have that type of documentation. So that's another thing we're looking at. We're looking at creating glossaries and sort of how-to guides. Going back to this point that there's a lack of understanding of how these assets work and how you invest into them. So quite a lot of different things to do. We're hitting a number of different nails on the head, and I think you'll hear a lot more about that during the TFDI day.
And can I also ask you about the DNI accounting treatment work that ITFA triggered in Q3?
Right. So one of the uses of negotiable instruments, so DNI is our Digital Negotiable Instrument initiative. One of the things that has been happening in supply chain finance, it's not something that's specific to digital assets, is looking at how you account for supply chain assets, supply chain finance payables, if you like, on buyers' balance sheets. And there's been quite a lot of new rules that have been introduced over the last 6 months. This will be effectively the first reporting year, so we don't know exactly what that will look like, but the corporates are getting to grips with that this year. When we start introducing things like digital negotiable instruments, which, as I say, are very good debt investment vehicles, very good instruments for corporates to use when raising debt, especially for trade. There's a question that's arisen as to whether the form of that negotiable instrument is actually impacts or is impacted by the new accounting rules. That's something we'll be exploring actually in an ITFA webinar quite shortly. we're hopeful that the form of the instrument won't change the accounting, but it is a question that a number of auditors have been asking.
Now, Sean, you're appearing at the Trade Finance Investor Day in October. You mentioned it a moment ago. And your presentation is called ITFA's Roadmap for Institutional Investors. So what kind of things will you be touching on in that?
I'll be touching very much about this new class of trade asset, the Digital Negotiable Instruments. We have a number of members, including one high street bank that's actually been issuing these. It's very small scale for the moment, but we are seeing a pickup. So it's definitely a scalable solution. So I want to talk very much, and I'm very keen, I'm very passionate. I really believe that these are great investment assets for non-bank investors. They're much simpler than, say, loans or investing in letters of credit, which is where a lot of the sort of the confusion and the complexity seems to have arisen. But the innate ability of these instruments to have all of these sorts of extra bells and whistles, including KYC, AML and all that sort of stuff, attached to them in a very sort of convenient package. And I want to talk, inevitably being a lawyer, I want to talk a little bit about the rules. So one of the things I'll be talking about is a set of rules that we've created for actually buying and selling these digital assets called the Uniform Rules for Transferable Electronic Payment Obligations, a very simple set of rules to allow creators and on-sellers of digital assets to sell these into the market, and we hope that will be the recreation of the forfeiting market, which was a huge market in the 80s and 90s.
And sticking with the Investor Day, Sean, face-to-face events like this, why are they so much better than a quick Zoom call?
Well, I think there's a lot to explore here, Andy. So, we're not talking about things that are well known. We're talking about things that are actually very dynamic at the moment, to which a lot of creative thought needs to be applied. We need to really move the market on, and it's clear that there is still a lot of, I don't want to say resistance, but there's a lack of understanding about what this market could be, how you invest in it, what the assets are. So, going into these things over a phone call, it just doesn't work. You need to do this. You need to speak to people. You need to brainstorm, and you really can't do that over a Zoom call.
Absolutely. Well, that's the end of our Zoom call today. Let's leave it there. And remember, you can hear more from Sean at the Trade Finance Investor Day. It's at the Grove Golf and Spa Resort, about an hour from London. Go to tradefinancedistribution.com. Click the link at the top of the website for all the details and for buying your ticket. Sean Edwards, the Chairman of ITFA, thank you for your time today, and I'll see you in October.
See you there. Thanks, Andy.